Welcome to this week's ASX strategy session. Thanks for joining me for another week. Not live this week, it's school holidays, and I'm with the family on the Gold Coast, getting some warmer weather up north. But nonetheless, lots of interesting things to go through today with movement in the ASX, the US market. We're also going to have a look at the commodities, copper, gold, oil, and uranium. There's a few interesting things there to have a look at as well. Of course, everything today, general commentary only, doesn't take your personal situation into account. Having been through that, let's get into this week's first chart. And starting with the ASX 200. Well, the ASX 200, is it close to breaking from this recent trading range? I think it is. I think it is close to breaking, but in which direction does it look like it's going to be? I'll tell you what I'm thinking in a moment. And then over in the US, the S&P 500 also looks set for a breakout. Are we about to see the 25th all-time high for the year? I'll come back to this shortly. But before we do that, let's start with this latest price action in the ASX 200. So the ASX 200 continues to trade at a critical level right around these moving averages. Prices have been moving either side of the moving averages over the last couple of weeks, but they haven't been able to sustain a move in either direction. The sell-offs rebound and the rallies come back. So it really is stuck around this key point around the averages. What's interesting here is that prices tried to break lower earlier in the week. So down here on Wednesday, you can see there was some sharp selling on Wednesday. Prices tried to break lower, but then it didn't attract that all-important follow-through selling to really start to take things down to a lower level. And that's really been the pattern. That's been the pattern over the last couple of months, really coming back over to the April, where we get the sell-offs, but the sell-offs never attract that follow-through selling, and then markets rebound. We've had this grinding, choppy decline ongoing for the last few months. And this is another example of an attempt to sell the market, which didn't get that follow-through selling. And that makes me think the sensitivity remains to the upside. The key levels to watch now, I think the key levels to watch over the next week or two, it's going to be this high point from Monday and the low from Wednesday. So the key points are really tightening up now. I think whichever breaks first, I think that's likely to trigger the next round of momentum. A break of Monday's high could really start to see the ASX 200 pick up some ground. Likewise, if this was to break to the downside. Another area to watch closely, I think it's the financials. We've been looking at this over the last few weeks, really. And what's interesting here with the financials is well, I think this has been a positive week, and that is because the financials are now back above their moving averages for the first time in really since you've got to go back to around April to have like a decent stretch above the moving averages, and prices are now starting to get above those averages. Of course, I'm using the 50 and the 100-day moving averages, and those averages are also starting to turn higher. We haven't seen them turning higher for several months. The key now is, can prices, firstly, can they establish themselves above the moving averages? That's the next thing that needs to happen. We've gone from below the averages to above. Now can prices establish above the moving averages, create a platform from which higher levels can then be attained? There's still work to do here, but the financials have moved out of a vulnerable position, being below declining moving averages. And the dominant structure really is this big trading range, which has gone on since around October last year. It's getting above these averages is the first step in being able to challenge the top of the range and then potentially being able to stage a breakout. As I say, there's more work to be done, but it's moved in the right direction, getting back above the moving averages. I think that if the ASX 200 is going to break higher, well, I think financials need to contribute. It's such a large part of the local market. And let's now have a look. Let's come across just for a moment to the equal weight. So the ASX 200 equal weight. Now, prices have slipped slightly this week, but they still remain reasonably stable just below the moving averages. The averages have also largely flattened out over the last few weeks, and that follows being mostly in decline since around February. Back in February, we had this largely decline in the moving averages. They've now flattened out. Prices are sitting just beneath them. This is where I think the equal weight, it really needs to maintain its footing. We just can't see the equal weight continue to slip from here and then maintain that possibility of the ASX 200 breaking upwards. The equal weight really does need to hold the line around current levels. As it stands, there are signs of an emerging series of rising highs and rising lows. Come back to the March low point, and we've got from the low, we've got a series of rising highs, only just hanging in there at the moment, though. Tentative series of rising highs. Sorry, I should have been saying rising lows previously. So we've got the rising lows, rising highs. So we've got the building blocks. We've got the building blocks of a recovery, but prices really do, as I say, they need to hold where they currently are. I think the key is that prices hold these levels and then get back above the moving averages, get back above this resistance around 2,150. That's the key for turning this around. I think that if the ASX 200 is to break out to the upside, it requires the equal weight to be back above the moving averages and this resistance point. I think the risk here, the risk with the equal weight is that prices do continue to slip and do find their way below the June low, and then we've got the May low just beside that. That would really start to disengage those signs of upward momentum that have been building over the last few months, and then add some downward momentum into the mix. So I think very important prices hold around current levels. Just back on the ASX 200, this is where the ASX 200 really needs to prove itself. It's where prices need to hold, encouraging price action on Friday. So I'm filming this, I'm pre-recording this at around midday on Friday, and we've got an initial good start to Friday, but it needs to build upon. This is where the buying needs to emerge. I currently favour that this period since mid-June, that this has been a corrective pullback, simply because we had a strong rally during early June, and we've had this slow grinding pullback to the averages over the last 4 or so weeks. That's generally a corrective type of price movement. But the risk just remains elevated while this range persists. My approach here: maintain exposure to the market. I think be open to new opportunities, but I'm also holding more cash until trending conditions return. This remains a large sideways trading range. If your portfolio has been going sideways over the last 10 months, well, look what the ASX 200 has been doing. It is a sideways market, and we're waiting for signs of that. Hopefully, the emerging strength, which gives us a bullish break out of this range. I think that ultimately comes, but it just takes time. So holding more cash until trending conditions return. Okay, we're going to jump to the US market next. If you're getting some value from this, please click that like button. Leave a short comment, just whether you like the video, whether you think we're going to get a breakout or a breakdown, just something that tells YouTube you're engaging, you're watching. YouTube shows other people, and that helps me heaps. So please do those things. Short comment and click that like button now whilst you're thinking about it. Okay, so off to the S&P 500 now. And, well, the S&P 500 continues to coil up along the moving averages. So you can see the 50-day moving average, the 100-day moving average, and since the June high, we've had this coiling up of the price action. Now, these tight compression ranges, which we find the S&P 500 is currently in, They're one of the most classic chart structures that we find, and they typically form after a period of trending prices. So we see the from the March low, there's a period of trending upward prices, and that has led into this trading range above the moving averages. And when we do get these structures, they often occur when they do, when these structures occur above rising moving averages, in my experience, they usually resolve to the upside. We usually get an upside break from it. That's when we get the consolidation above rising moving averages. This week's price action is also interesting. So prices tried to sell off on Wednesday. You can see here prices opened on Wednesday. They traded lower through the day, and that was on news of renewed fighting with Iran. But then they closed the day up near their highs, and then they attracted follow through buying on Thursday. You can see Thursday price action again closing up near its highs. So that's bullish price action, and I think that's a sign that buyers remain dominant. Buyers are dominating this market. This isn't a seller's market. The buyers are buying stock on the pullbacks. I think we'll see the S&P 500 hit a new all-time high in the next week or two. And if we do, that would be the 25th all-time high for the year. A concern I had last week that I was telling you about was that there has been divergence between the S&P 500 and the NASDAQ with other key indices. So, for instance, like looking at the NASDAQ's had a series of new all-time highs over the last 4 or so weeks, whereas the S&P 500 and the NASDAQ, they've been trading below their June high. But just looking at this latest price action, it looks like the S&P 500 is on the verge of pushing to a new all-time high. The NASDAQ has similar price action. Should that happen, well, then that divergence, which I was speaking about last week, well, that then disappears. And so I do think that's probably where I think that's the path of least resistance at the moment. I think prices head to that new all-time high. Looking at the Magnificent Seven, so this is the Roundhouse Magnificent Seven ETF. MAGS is the ticker code, so it includes all those big tech and IT type stocks, Nvidia, Microsoft, Apple, and the like. So this has been I think what I'd describe as a vulnerability for the market, for the US market, over the last month or so. And that's been because, yes, S&P 500 hasn't been able to sustain upward momentum when this key group of stocks hasn't been participating. And they haven't been participating, of course, since late May. We've had this sell-off. We've had time below the moving averages. So there've been a break on the market. And, of course, we've seen the S&P 500 in a trading range. This still doesn't look like it's ready to spring to new highs, but it is back. If we just look at the latest price action, it is back above its moving averages, and it has closed at its high for the day on Thursday. So I think it's a positive first step. It's a positive first step to get this key group of stocks from below the averages back above their averages with a closing high of the day. More work to be done, but it does remove some of that near-term vulnerability to the market when prices were trading lower on several days in a row below their averages. Just quickly back to the S&P 500. I think the play here, as it has been for some time now, it's been staying long the US market. As it stands, this remains an upward trend. And we now have a coiling range above rising moving averages. So I think that's a bullish setup, and it's a setup that often leads to new highs. As always, though, it's not like 5 green lights and just go. It's always managing risk. It's always being aware that situations can change. It's managing risk, but staying with what's working. What's working has been the rising market. As I say, this remains a bullish market. Okay, so we're going to go over to the small caps next. We'll do the US small caps, the Aussie small caps, and then go into the commodities. If you're not a strategy session member, that's the end of the free section. So think about becoming a strategy session member. There's a link below. Doesn't cost very much. A whole lot more interesting things we go through. So think about doing that. All right, so let's go over next to the Russell 2000, the US small caps.